We're just waiting for the ranking member. He's on judiciary, so. Good morning. The committee will come to order. I thank everyone for joining us this morning, and I want to especially thank the witnesses for being here today. America's small businesses are a catalyst for creating employment opportunities and driving growth in the U.S. economy. The estimated 30 million small firms in the U.S. represent 99% of all employers and support nearly 56 million jobs. One way for Congress to support small businesses is through well-conceived and targeted tax policies that helps small businesses to grow and expand. Over the years on this committee, we have heard that small firms need a simple tax code, one that levels the playing field, and tax policies that create certainty for small companies across the country. It has now been a full year since full implementation of the tax law, and by any objective measure, the Tax Cuts and Jobs Act shortchange small firms. Take, for example, the signature piece of the Trump-led tax law, a permanent reduction of the corporate tax rate from 35% to 21%. A simple, easy to understand permanent benefit for corporate America. This tax cut for Wall Street will not only balloon our deficit, it puts big business over small. This is because 95% of the over 33 million small businesses in the United States are not organized as corporations and will not see any benefit from a lower corporate tax rate. Unlike the permanent reduction in the corporate tax rate, provisions meant to benefit small firms, like increased Section 179 expensing allowance, are set to expire. Small business owners deserve the same certainty that the tax law currently provides large corporations, and this is another example of a missed opportunity to meet their needs. We will hear about Section 199A, which was intended to level the playing field by creating a new deduction for small business income. Unfortunately, we have heard that this provision is incredibly complex and penalizes small business owners simply for operating in a particular industry. We have also heard horror story from CPAs and small firms attempting to utilize this provision with little or not guidance from the IRS, leaving some small firms wondering if their next phone call is not from a customer, but rather one from the IRS audit division. For the small firms that have used it, many have spent countless hours and money on tax professionals only to find out that the costs and time wasted outweigh any benefit. This is not the simple, straightforward tax reform small businesses deserve or demanded, and it is certainly not the simple tax cut that corporate America received. What we are seeing nearly a year after the tax law was passed is that Main Street sees little to celebrate. That is why it's not surprised that nearly 50% of small firms said that the new tax law have no impact on the growth or profitability of their business. And when small businesses are shortchanged, so too is the rest of our economy. The Republican-led tax bill promised to pay for itself, lead to increased economic growth, and create higher wages for American workers. In fact, the exact opposite has happened. Deficits are rising, growth is slowing, and there is no indication of any wages increases for middle-income workers. And we also know that the president's words ring hollow when he said the rich will not be gaining at all in this plan. A doubling of the state tax exemption, corporate stock buybacks of nearly $1 trillion in 2018 alone, and the top 1% receiving an average tax cut of over $60,000 demonstrate the wealthiest among us did gain while small businesses and working families were an afterthought. At a time when small entities are reeling from trade tensions with some of our largest trading partners, real tax reform will put Main Street ahead of Wall Street. The fact is, real bipartisan tax reform that helps small businesses, American families, and is fiscally responsible could have been achieved. Unfortunately, the tax law was pushed through rapidly, aimed at achieving a political goal, a goal that is not good for small businesses, not good for working families, and not good for the economy. It is my hope that this hearing will shed light on the many issues small businesses are facing and Congress can work together, just like this committee does day in and day out, to find more responsible tax solutions that truly help small firms and strengthens our economy for the long term. With that, I want to again thank each of the witnesses for joining us, and I look forward to your testimony. Now I will yield to the ranking member, Mr. Chabot, for his opening statement.
I thank the gentlelady for yielding, and we oftentimes in this committee say how bipartisan we operate. And just last week we passed 5 bills that were bipartisan. It had to do with small business veterans and having opportunities to create jobs and do well in this country. This is one of those times when we don't necessarily agree, but we will do so respectfully, and we can disagree without being disagreeable, even though she was just wrong on everything she said. No, just kidding. Not kidding. No, really. But we really do care about each other in this committee, and but this is one where we just philosophically have some differences. Almost exactly a year ago, this committee held a hearing on the impact of tax reform on small businesses across our nation. As I mentioned in that hearing, the economic and philosophical debate on tax benefits will surely continue as it is here today in this committee. However, the success of the Tax Cuts and Jobs Act will be measured on its direct impact on the ground in people's lives, both individuals and small businesses. Simply put, are small businesses better off now compared to where they were before tax reform was implemented? Today, the national unemployment rate stands at about 3.7%. This hovers around historic record lows. Consumer spending is up, and retail sales have also increased. Pro-growth policies are moving this economy in the right direction. At the small business level, surveys across the country show the same thing. Small business owners remain very optimistic about this economy. According to the latest U.S. Chamber of Commerce and MetLife Small Business Index from the second quarter of 2019, almost 60% of small businesses say the economy is in good health or better. In the same survey, nearly 70% of all small business manufacturers had a positive outlook for the economy, 70% in an industry that's been hit for quite some time. The NFIB monthly survey also remains near record levels. When small business owners are asked specifically about the tax reform, we're seeing basically the same results. Within NFIB's 2019 report on taxes, nearly 75%, or 3 out of every 4 businesses reported that tax reform would have either a positive or very positive effect on their business. Beyond statistics and survey data, it's not hard to see the impact in our communities. Trucks carrying goods and products are bustling up and down our roads, and stores are keeping their lights on late at night, and they're hiring people. However, at its best said from small business owners themselves. I have a whole series of letters from small business folks in my district that all say essentially the same thing, that tax reform allowed them to invest and expand their businesses. Just to name a few of these, E-Beam Services Incorporated, Harrison's Pro Tree Service, Minuteman Press of Lebanon, Jim Osborne Trucking, Honor Law Construction and Remodeling, Total Quality Manufacturing, and on and on. We can debate economics all day long, but when small business owners are using the Tax Cuts and Jobs Act to reinvest in their companies, their employees, and their communities, the intended effect of that legislation is being realized all across America, and certainly in my district. It's clear. Small business owners are able to hire more workers, give bonuses, and reinvest in equipment because of the Tax Cuts and Jobs Act. As a result, the small business economy is healthier now as compared to a few years ago. I think we look forward to hearing from our witnesses today. We want to thank them for participation, and I would just note, as in all hearings, the majority gets to pick 75% of the witnesses, 3 out of 4. So my guess is 3 out of 4 are maybe going to have a different view than me here, but we will disagree without being disagreeable as well. So thank you all for being here, and I yield back.
Thank you, Mr. Shabbat. And the gentleman yields back. And if committee members have an opening statement prepared, we will ask that they be submitted for the record. I would like to just take a few minutes to explain the timing rules. Each witnesses get 5 minutes to testify, and the members get 5 minutes for questioning. There is a lighting system to assist you. The green light will be on when you begin. The yellow light comes on when you have 1 minute remaining. The red light comes on when you are out of time, and we ask that you stay within that time frame to the best of your ability. I would now like to introduce our first witness, Ms. Jane Gravelle. Ms. Gravelle is a senior specialist in economic policy at the nonpartisan Independent Congressional Research Service. Ms. Gravelle has written extensively on economic, tax, among other issues. Our second witness is Mr. Grafton Wiley. The fourth, a CPA and small business owner. Mr. Wiley has more than 30 years of experience as a tax accountant and consultant to privately held business owners. He has twice been selected as the Rhode Island Small Business Accounting Advocate of the Year, and once as the New England Small Business Accounting Advocate of the Year by the National Small Business Association. He's testifying today on behalf of NSBA and the Rhode Island Society of CPAs. Our third witness today is Manuir Baig, founder and CEO of CIS USA, Inc. in Manassas, Virginia. He has over 2 decades of experience in IT operations, governance, risk management, and compliance. Prior to CIS USA, Mr. Baig worked at Microsoft, where he was responsible for the development and execution of an enterprise-wide information security risk assessment program. He's testifying today on behalf of the Small Business Majority, a national small business advocacy organization founded and run by small business owners. And now I would like to yield to our ranking member to introduce our final witness.
Thank you, Madam Chair. Our witness here, the final witness today, will be Justin Conger. Mr. Conger is president of Conger Construction Group in beautiful Lebanon, Ohio, which happens to be located within my congressional district. Really a beautiful, beautiful town. Conger Construction Group has been a trusted leader in Southwest Ohio since it was founded in 1992 by Justin's father, Larry. Justin Conger took over the role of president of the company in 2016 and really hasn't looked back. Beyond his role with the construction firm, Mr. Conger serves on the Workforce Investment Board of Butler, Claremont, and Warren County. Additionally, he's a board member of the Warren County Chamber Alliance. For those of you that don't know Warren County, it's in the Warren County is in the northeast. It's northeast of downtown Cincinnati. It's an area that's really thriving. It's the third fastest growing county out of 88 counties in Ohio. Mr. Conger, we really appreciate you being here today and taking time away from your business, and yield back.
Thank you. The gentleman yields back. And now, Ms. Gravelle, you are recognized for 5 minutes.
Thank you for the invitation to discuss the issue of the effect of the December 2017 tax revision, popularly known as the Tax Cuts and Jobs Act, on small business. This revision was estimated to reduce taxes by almost $1.5 trillion over 10 years. For FY 2018, the act was estimated to reduce individual taxes by $65 billion and corporate taxes by $94 billion. In the case of corporations, primarily by reducing the rate from 35% to 21%. Individual rates were also reduced, but by less, and $28 billion of the individual cut was due to a pass-through deduction that allowed owners of pass-through businesses, such as partnerships and proprietorships taxed under the individual income tax, a 20% deduction for certain business income. These individual provisions are scheduled to expire after 2025, but not the corporate rate cut. The tax cut can affect small business through two different mechanisms: by an increase in overall economic growth through demand for their products, and through a decrease in tax burdens on investing and operating their businesses. Most analysts prior to the tax cut projected a relatively small effect on the growth rate in 2018, with the CBO projection of 0.3% near the middle of the forecast. Actual growth appeared to be relatively consistent with these effects, growing at slightly below the CBO forecast. Business investment growth was strong in 2018, but the extent to which that growth is due to the tax cut is unclear. Investment response takes time to plan and is volatile. Also, the components of investment that had the largest incentives didn't grow at the highest rates, so the pattern of growth is inconsistent with supply-side incentives. In the intermediate and longer run, forecasters project a wider range of outcomes, although most with a modest growth rate averaging around 0.4%. I want you to note that this is a change in the level of projected output and not a change in the growth rate. If occurring over 10 years, it implies an annual increased growth rate of 0.04%. In the longer run, the effects will largely arise from investment incentives, but these incentives will likely be increasingly offset by crowding out, as increases in the debt cause resources to be drawn away from private investment. There is at least a possibility that small business will benefit less from any economic effects, particularly in the first few years, as, considering investment goods, small business plays a larger role in construction and corporations a larger role in manufacturing. Focusing on the demand for construction, the overall demand for business structures may be offset by decreased demand for owner-occupied housing due to the reduction in itemizers. These disincentives will expire after 2025 if not extended, but so will the incentives for small business, who are the major investors in business structures and rental housing. Turning to the direct effects of the tax cuts, small business benefits not only from the pass-through deduction, but from the individual tax cuts, and estimates suggest they are similar importance, with tax rates leading to a 3.8 percentage point deduction and the pass-through a 3 percentage point deduction. This is less than half the rate of the corporate rate cut. The effect of the pass-through deductions is reduced because it is phased out at high incomes for earnings of ineligible service firms and for other firms if they do not provide enough wages or own enough assets. Estimates indicate that the cost would have increased by 66% if the phase-out were not imposed, and the service business restriction was responsible for about 60% of that cost saving. The study also found that 3 types of business operations were responsible for over half of the reduction from the phase-out: professional services, health, and finance and insurance. The pass-through deduction has added complexity, considerable complexity, to tax compliance and administration, including equity choice, and has contributed, along with some rate reductions, to complications in tax planning. For example, choosing to be an independent contractor would be an example. For a variety of reasons, the business rate reductions may not be very effective in providing investment incentives because they interact with expensing provisions in a way that causes a disincentive for certain investments, because they are phased out, creating disincentives in the phase-out range, and because they are temporary. Arguments may be made that these tax cuts are important in providing cash flow, although much of a tax cut is likely a windfall that does not affect investment. There are alternative ways to address investment by small business, including increasing access to credit and tying tax reductions directly to investment. Thank you.
Thank you. Mr. Wiley.
Good morning, Chairwoman Velasquez and ranking members Javit and members of the House Committee. In addition to being a CPA, I am also a small business owner. I have an interest in an Italian restaurant and some businesses in the cranberry industry. And so I'm here representing myself as a tax practitioner, myself as a small business owner, and the NSBA and the Rhode Island Society of CPAs. In responding to questions about taxation, there is always one standard answer, which is, it depends. That's applicable to the Tax Cut and Jobs Act. There are some good things in this bill. There are some bad things in this legislation. I view it as a work in progress. That fact, according to the NSBA Economic Survey, is 29% of small business owners said that filing taxes in 2018 was more difficult when it was compared to 2017. And I can tell you the tax practitioners can say the same thing. In my estimation, the primary need in tax reform was to address the competitiveness the U.S. was experiencing in the international taxation for C corporations, with the highest tax rate in the world, or close to it, at 35%, although some of that was reduced with special deductions. We were getting killed when it came to competing with countries like Ireland at 12.5% and much of Europe in the mid-20s. Global financing will find a way to minimize international tax burdens, and the movement of capital is very fluid. I believe most in Congress understood that when they were addressing tax reform. Bringing the corporate rate down to 21% has kept us competitive, and there'll be less incentive to move from place to place. The National Small Business Association established the basic principles of tax reform a few years ago, and I was a contributor to that thing, and we've put that in our package. I won't go over those. The Tax Cut and Jobs Act only partially measured up to these principles. We have concerns that more should be done to ensure simplification, fairness, and long-term sustainability. And according to the report, when asked how to fix the Tax Cut and Jobs Act, parity, simplification, and permanency were the top priorities. After much discussion and analysis, the NSBA did support passage of the Tax Cut and Jobs Act. However, we recognize that it's not perfect. It may be a good start at tax reform, but more hard work needs to be done in the areas of simplification, parity, and taxation between large corporations and small businesses, doing away with sunsets and making tax reform permanent, and addressing the deficit. The NSBA has done a tax reform report card, again, which is in your package. While it covers a lot of different areas of taxation, I will focus on how it has impacted small businesses. Tax simplification. If simplification was the goal of this tax reform, it's a dismal failure from a small business perspective. Individuals may see a smaller or what seems to be a simpler preparation, but it's not that simple. You may have simplified this tax code beyond all comprehension. Tax permanency and rate reductions, that's been an important aspect of this. Unfortunately, non-corporate and individual share taxpayers are not made permanent. No way, when I first heard about this, said, well, that may not be a problem. No Congress in the future would allow those to be expired. I've changed my opinion there. I now foresee the real possibility and probability that Congress, not agreeing on an extension in 2025, would result in a substantial tax increase without a vote. They will be finger-pointing both ways, and the taxpayers are going to get slammed. The one issue I would like to comment on is the salt issue. There is a real concern on my part on salt. I'm not as concerned about the individual real estate and income taxes. I am very concerned about the business taxes, and with a C corporation, you get to deduct the salt taxes on pass-throughs. It falls through to the individuals, and we can't deduct those. In Rhode Island, where I'm from, I have passed legislation to fix that. Congress should pass it and make that a federal issue, not a state issue.
Thank you, Mr. Wiley. Mr. Baig, you're recognized for 5 minutes.
Chairwoman Velasquez, Ranking Member Chabot, and fellow members of the committee, good morning. I would like to start by thanking you for inviting me to speak with you today about the impact of 2017 Tax Cut and Jobs Act on my and other small businesses. I am the founder and CEO of CIS USA, a hub zone, women-owned, minority-owned company based here right in Northern Virginia, Manassas, Virginia. CIS USA specializes in cybersecurity, governance, risk management, compliance, IT modernization, and strategy consulting. In addition to owning my own small business, I am also an advocate for the small business community. I am one of the 58,000 entrepreneurs in Small Business Majorities Network. I am also an active member of the Prince William Chamber of Commerce. As a result of my involvement, I am aware of the daily struggles many other small business community members experience and can speak more than just about my own challenges. I can say that with confidence that small businesses need more than just short-term benefits that are provided in the legislation. We need a long-term and sustainable strategy for growth. The Tax Cut and Jobs Act is providing a very small percentage of small businesses with short-term relief, not enough to deliver upon the promises made to the American public. Although it was billed by President Donald Trump as a historic business tax cut that will really do good for business owners and enable small firms to hire more employees. Unfortunately, it has failed to deliver upon its promise. The first problem with the Tax Cut and Jobs Act is complexity of the code, which requires extensive consultation with my accountants, and in some cases, they themselves are trying to struggle with it. The second problem is that it did nothing to address the pre-existing burdens in the tax code. Simplification was one of the promises made, not delivered upon. The third problem is that most small businesses didn't save money it promised them to save. The Tax Cut and Jobs Act is not designed to help very small businesses like mine. While there are deductions available for manufacturing businesses, I am in the service industry and don't have much to deduct. While my experience with the Tax Code and Jobs Act is negative, it would be inaccurate to say that the new tax law has not helped any small business. I have spoken to many small businesses, including a distillery in my area, that has benefited from the reduction of the federal excise tax. However, they may be heading towards a crisis even though they saved money. Unlike many of the large corporations that use their savings from the Tax Cut Jobs Act to buy back shares and increase their value of their business, most small businesses reinvested in growing their business. This by no means is a bad thing. The problem, however, is the temporary nature of some of the new deductions set to expire in the next year or so. Businesses investing their savings now may not have extra cash in 2 to 3 years to continue investing, and the projects might not get completed. This can result in the total loss of their investment. In order to make the tax code work for Main Street's small business, I have the following recommendation. Replace the Tax Cut and Jobs Act pass-through component with a provision allowing small business to deduct their first $25,000 in business income. Raise revenue by closing inefficient corporate loopholes, including international tax policies, carried interest, accelerated depreciation, reintroduce and enact the Protecting Taxpayer Act, create small business opportunities through tax credits and incentives, make the new market tax credits permanent, pass healthcare tax equality for the self-employed so that freelancers can deduct their healthcare expenses from the FICA tax obligations, create tax incentives for workforce development. As a small business, if I hire people, I have to pay for their training. And sometimes they have to go for a week-long training as well. So I'm basically heading into a double-edged sword. I have to give them a week off and then pay for the training as well. Having some incentives there that can offset one or the other will be greatly appreciated. In conclusion, I'm concerned about the long-term impact of the tax cut. It increased the deficit by $1.9 trillion in order to dramatically lower the rates for large corporations and the very wealthy while offering very little benefit to Main Street small business owners. In addition, the cuts passed through entities are structured in a way that give the majority of benefit to the largest 2.6% of pass-through business entities. If policymakers are serious about wanting to level the playing field for small business and drive our economy from bottom up, they need to implement policies that will help all entrepreneurs rather than giving the tax breaks to those who need it least. Thank you again for the opportunity to share my story. I look forward to your questions.
Thank you, Mr. Baig. Mr. Conger, you're recognized now for 5 minutes.
Thank you, Chairwoman Vasquez, Ranking Member Shabbat, and the members of the committee. I'm honored to have the opportunity to testify before the committee today on the Tax Cuts and Jobs Act helps small businesses. As Representative Shabbat said, my name is Justin Conger. I'm a second-generation owner and president of Conger Construction Group, a commercial construction company located in Lebanon, Ohio. On behalf of Conger Construction Group, our employees, our clients, the 4,700 small businesses in Warren County, and 109,815 employees I represent as a member of the Warren County Chamber Alliance. Thank you for the opportunity to submit this statement for the record before the Committee on Small Business Hearings. Not only am I a second-generation business owner and entrepreneur, I'm the current board chair of the Workforce Investment Board of Butler, Claremont, and Warren County, as we are the Area 12 utilization of WIOA federal funding. I'm also the board chair of the Associated Builders and Contractors of Ohio, ABC, and a member of the Jobs Ohio Ready Cincinnati board. I present this to you to understand that my participation in these organizations isn't about personal recognition. It's to put into context and to attest to my qualifications to present this testimony. I bring a unique perspective on the positive impact of local, state, and federal tax policy has on small businesses. The portion of the Tax Cuts and Jobs Act that impacts Conger Construction most deeply is the provision that lowered the federal corporate tax rate to 21%. You see, I'm a small business owner, and I'm not on Wall Street, and we're founded as a C corporation. So the 21% tax change has a dramatic impact on our business and how we function day in and day out. Under the Tax Cuts and Jobs Act, the much-needed savings provides more capital to reinvest in our business and in our employees. From 2016 until 2018, I am proud to say our business has grown 110%. This growth would not be possible without the Tax Cut and Jobs Act of 2017. See, our commercial construction company located in Southwest Ohio, and 100% of our revenue is generated from projects within a 100-mile radius of our office. In the Southwest Ohio 16-county MSA, there are currently over $2.5 billion in active construction projects. This uptick in commercial activity has increased dramatically in the past 18 to 20 months. The economic expansion provides opportunities for Conger Construction Group and hundreds of our subcontractors, suppliers, and vendors and employees. You see, we only self-perform 10 to 15% of the work. We sub out 85 to 90% of our work to subcontractors. These subcontractors and their employees are feeling the benefits of a robust economy. In some ways, commercial construction has a waterfall effect. Conger Construction is experiencing large economic growth and prosperity, and so are thousands of other frontline workers employed by our partners and subcontractors. Continued economic expansion is providing increases in wages never before seen in my 18 years in this business, all of which is great for the American economy. Conger Construction Group is a prime example of one of the many businesses across the country growing and expanding by utilizing the benefits of the Tax Cuts and Jobs Act and reinvesting in our business. As I mentioned previously, we have grown 110%. As a business owner, entrepreneur, and community leader, I'm proud to say the growth of the past 3 years I'm even more proud that we have grown our culture and our employee base. Since 2016, we have increased our employee headcount from 28 full-time equivalents to 48 full-time equivalents and counting. We have increased our wages by over $1.5 million, and in 2017 and 18, we paid out over $381,000 to those 30 employees that were non-owners in the business. As a business owner, I believe we have a responsibility not only to support my family, but to support the families of our workers. With a record low unemployment, finding talented workers to fill open jobs is harder than ever. From my experience on the Workforce Investment Board, there's a workforce shortage of epic proportion. If businesses want to continue to grow, they must take care of their employees, both personally and financially. Growing wages is a major part of that. As I said, the 21% tax cut for a C corporation like ourselves, we are continuing to reinvest in our business, not only growing our employees and doubling, but we're reinvesting in our business currently as we're undergoing an expansion and renovation of a project. Another aspect that has a tremendous impact on our business is the ability to accelerate depreciation on our investments of equipment, not only office equipment, but large heavy equipment machinery we need to utilize day in and day out to complete our projects. Thank you. I appreciate the time and opportunity.
Thank you, Mr. Conger, and thank you all for what you have shared with us. I will begin by recognizing myself for 5 minutes. Ms. Gravelle, we were told that passing this tax bill will benefit the economy overall. In the interest of time, can you answer these questions with a yes or no answer? Will the tax cuts create enough economic growth to pay for themselves?
No.
Have provisions like the pass-through deduction simplified the tax code for small firms?
No.
Isn't it true corporations use their tax savings to purchase nearly $1 trillion in stock buybacks in 2018 alone?
Apparently.
If this an accurate quote from your report, and I quote, while evidence does not indicate significant repurchases of shares, either from tax cuts or repatriated revenues, relatively little was directed to paying worker bonuses.
Yes.
Thank you. Mr. Wiley, we have heard that Section 199 is incredibly complex. Can you briefly walk us through the steps a small firm must go through before even determining if and how much they qualify for?
It is a very complex calculation. You have to determine whether you're qualified as a small business. There are some firms that are not qualified, primarily the service businesses. There's an income threshold that you have to, if you're below that, you can deduct it even as a service business, but it gets phased out relatively quickly. There are limitations of W-2 wages, which make it complex. So it is an extremely complex calculation, and sometimes you don't get the full benefit you think you would be getting.
So it seems to me that Section 199A is picking winners and losers between small businesses that can utilize the deduction, assuming you can navigate that web of complexity.
It is picking some winners and losers, and I don't have a big problem with excluding the public service or the professional services business. I mean, if I operate as a C corporation and I take most of my income out as a salary, and I pay it 35% compared to somebody who would be able to take the 21% deduction using the same money as a pass-through, I don't have as much a problem there, but it is complex. They did pick some winners in there, primarily the architects. I'm not sure why, but I'm sure there was some political pressure along the way. So it did pick some winners and losers, but there are some
Thank you.
abuses.
Thank you. Mr. Baig, you just discussed how creating and decreasing complexity are two goals for small firms when it comes to tax policy. The corporate tax cut was made permanent, while the individual and Section 199A deduction for small firms expire in 2025. So how does this lack of permanency impact your business planning?
First of all, being a small business who is in the service industry, so tax cut does not really help me much. It's not designed for service industry people, as Mr. Wiley was referring to. It helps more on it has winners and losers, and I'm one of the losers of the tax cut. It has actually increased the burden on me by having to go through the navigation of it, and then the 21% tax cut or the income that I can get to pass through. It is set to expire. So if I am benefiting from it today, and most of my benefits, any penny we make extra, we try to see if we can bring another person on board that can help us basically grow the business. And it does not happen overnight. It takes a few years to develop that process. And if I don't have this in next 3 years, the potential of the loss can be significant, because anything that I will invest in somebody for next 3 years will be lost all of a sudden.
Thank you. Mr. Wiley, a postcard filing form was touted as the game changer of tax reform. Are any of your clients filing their tax cards on a postcard?
No.
Mr. Baig, how much more time do you spend speaking and working with your accountant to ensure you were compliant?
This year, it took a few more extra days out of me during the tax season, where it used to take me an hour or hour and a half to get things done.
Thank you. My time has expired, and I now recognize the ranking member.
Thank you, Madam Chair. Mr. Conger, let me begin with you if I can. I think you mentioned that the most important part of the Tax Cuts and Jobs Act that affected you was reducing the rate from 35 down to 21%. And if you look at some of the debates that have been televised recently at the presidential level, to listen to some of the folks talking about the tax cuts bill, you would think that what you did, and people like you that own small businesses across the country and large ones, we would think that they just bought another yacht with that money, or they found some more ingenious way to exploit their employees, or perhaps rape the environment, or some other nefarious use of that money. What did you and your company do with the additional money that you were able to keep, rather than sending it up here to Washington?
That is correct. One of the 3 or 4 major things we have done with the extra money and the tax savings we've had is reinvest in our business. As a small business owner and entrepreneur, you have to constantly be competing against other businesses, and most of that competition comes through the form of employment and employees. One of my mentors told me years ago, hire smart people and get out of their way. And so we've been able to increase our employee count, our head count. As I mentioned, we've doubled our employment in the last 2.5 years, adding over $1.5 million in jobs. And in that payroll, and again, we're a small business, there's only 48 employees. Those are real numbers and big numbers to an economy like Warren County, Ohio, and Lebanon, Ohio. We've also increased payout of bonuses. So again, instead of when you have a workforce shortage, you have to take care of your employees. We're providing better health care benefits. We're providing more PTO. We're providing larger bonuses based on their performance year in and year out. Those things are helping us to continue to attract new employees, to attract smart people to come to work for us that will then enable us to grow. And so it's a major part of we're trying to, we have a fiduciary responsibility and an ethical responsibility to our employees to provide the best opportunities for them to grow. They're middle-class workers. Our least paid employee is a laborer who makes $18.50 an hour. He's an unskilled worker that we're trying to put through training. We continue to use training to raise our employees up. But we're paying good wages, better than good wages, to unskilled workers, and we're still trying to continually invest in them and grow them. One of the other things we've done is we're expanding our office. Due to the increase of employees and headcounts, we need more space. And so we're using that money to expand our offices, provide a better work environment that's more collaborative, that helps us execute our mission and deliver a good service to our clients.
So is it accurate to say that you are able to pay your employees more, so they receive more income from their job? And on the individual tax cuts, because about 85% of the people across the country got their taxes reduced. In our area, for the average family of four, it was about $2,400. So they're getting an additional, say, hike in their pay or more money going into their retirement through the company, et cetera. Plus, their individual taxes, for the most part, have been reduced as well, so they get two bangs for the buck, so to speak. Would that be accurate?
That is accurate.
Okay, thank you. Mr. Wiley, let me turn to you at this point. I definitely agree with some of your sentiment that you mentioned. I would very much like to have seen the tax bill simplified more. And with folks at folks on the individual level, there were a lot of people that did get it simplified to the extent that many more were able, that no longer had to itemize. They were able to take the standard deduction. That increased pretty much dramatic. And when they talk about the postcard, and this is kind of an example of the postcard that we were talking about there, that was never intended to be for a small business and the complexity of a business to be able to file it on this. We're basically talking about individuals. Is that correct?
Yes, that is correct.
Okay, and I also agree with your point about the permanency. And I also share your concern about making these permanent. I would have liked to have seen both at the business end and the individual end having it a permanent tax relief. And the Bush tax cuts, back at that time, we had a similar situation where they essentially ended after 10 years, and the argument was made, well, Congress will renew those tax cuts, and we did. So the tax cuts ultimately remained permanent. And I would just encourage my colleagues on both sides of the aisle, when that day comes, that we ought to make those permanent, and I'm committed to doing that for individuals as well as businesses. But I think both of those points that you raised are very, very good ones, and so thank you. And my time's expired. I yield back.
The gentleman's time has expired, so now we recognize the gentleman from Maine, right? Mr. Golden, Chairman of the Subcommittee on Contracting and Infrastructure.
Thank you, Madam Chair. I wanted to pick up with you, Mr. Wiley. I have spent 4 years prior to this on the Maine State Legislature, and kind of coming from a working middle class kind of state, have always, I think, put a bigger focus on middle class tax cuts and how tax policies impact them. You mentioned something, I think, about having to make some changes in Rhode Island relative to state and local taxes, and the SALT changes in this tax law, and also talked a little bit about some of the difficulties with figuring out how S corporations interact with the pass-throughs. I just wanted to ask you if you had any specifics you wanted to share with us quickly about what kind of fixes. I mean, what did Rhode Island do with that you would like to see at the federal level?
Okay, in my package, I gave you a copy of the bill that I drafted for that.
Perfect.
But basically, a C corporation can deduct state income taxes at the entity level.
Correct.
The tax law says that if the tax is paid at the entity level, it's a allowable deduction. What in Rhode Island we did was we said, okay, let the state assess the tax at the entity level and pass through a tax credit for the individuals. I feel comfortable that's going to be an allowed deduction for federal tax purposes.
I was going to ask if you're running into any troubles with implementation.
Well, I've got somebody, Connecticut has passed a similar law ahead of us. They're effective for 2018. Ours is effective for 2019. The IRS has attacked the restructuring of real estate taxes as a charitable deduction, and I tend to agree with that. That's kind of a sham. But I think this makes sense, that and it's fair, and it gives some parity. They have not attacked that yet. They know it's out there, but we're going to see if Connecticut gets attacked before ours are implemented. Again, I think this should be fixed at the federal level, not necessarily the state level.
Yep, thank you. I think, it sounds like we all know that we have kind of, regional economies as well, and I'm glad to hear that the construction economy is booming in your area. I think sadly that's not the case everywhere you go in the country, and I think in Maine, obviously, we'd like to see it doing far better than it is. So some of the benefits of this may not have made it all the way up, but I am hearing from some workers in the trades, people. We got general contractors, of course. We got people, carpenters, and others who are complaining to me that they're having a hard time figuring out, I think, how to get the most out of this tax law. Concerns about their inability to write off certain deductions that were really critical to them as small business owners, and their fear that they're having a hard time figuring this out. Do any of you want to field this question in regards to whether or not you think it's just the complexity of the law, or is it some kind of change that is making it so that workers or small business owners in the trades are not going to be able to write off some of their business expenses that they used to?
I'll take a stab at that. I think there's some limitations in the meals and entertainment, primarily the entertainment area, that is affecting them, and small businesses use entertainment more than big businesses. I think the complexity is going to require more small businesses to use the professional people. It's good for me, but not necessarily good for the client.
Yeah, that's helpful. Thank you. Something I was interested in this, Ms. Gravelle, when you get a lot of very small businesses, family-owned ones, sometimes you have some years where you suffer some losses. Do you think it's impacting a lot of small businesses negatively that they can no longer carry back net operating losses?
Well, I don't know that I haven't been able to find any data on this because it is so soon, but I would certainly think that and in general, for all business, that the carryback of net operating losses generally is viewed as a good policy. It tends to even out the taxes over time. So it's really better to have carrybacks that could retain their full value, and it's helpful for businesses to go through ups and downs.
Thank you. I'm pretty close to being out of time, so I'm just going to go ahead and wrap it up right there. Thank you very much, Madam Chair.
The gentleman yields back. Thank you. The gentleman from Minnesota, Mr. Hagedorn, is recognized for 5 minutes.
Thank you, Madam Chair. I appreciate this hearing. Actually, I think this is a great hearing to talk about some of the progress that's being made in the country, how strong the economy is, and how strong many of our small businesses are across the country. First of all, I'd ask unanimous consent or whatever to add to the record 4 articles that I have here talking about some of the things that have happened in the state of Minnesota with 3M, Hormel, and others, larger companies, but how the tax cuts have been helpful to some of our employees.
Without objection.
And my statement. And just last week, we had a small business owner from Mankato. Jeff Royce was here. He was talking a little bit about the minimum wage bill that we had before the Congress. And he said, ironic because of what's been going on with the growth in the economy and the demand for the windows that they produce. They're fine windows that they produce right there in southern Minnesota, go all across the country, sometimes across the world. He said, all their contractors, and then they're paying more than $15 an hour, such demand. And, I hear this everywhere. And first of all, I've never met a small business owner in southern Minnesota, and we meet scores and scores of them all the time, and not one of them has been demanding that we repeal these tax cuts. Haven't heard anybody say that. They might want them tweaked, fixed. No doubt about it, there's some things that we can improve. I haven't heard anybody say, let's repeal them and help our small business. That's just something as an aside. But whether it's Lindsay Windows in Mankato or Lumacraft in St. Peter, where they make fine boats, and we go to Construction 99 North in Rochester, Weiser Construction, La Crescent, all these places, it's the same thing. Since the election in 2016, a little bit of a different thought about what's going on in the economy. And after these tax cuts, people feel like things are booming. And the proof is kind of, to me, in the pudding. Their biggest complaint is they can't find workers to help them expand more and do even more business. And the reason the economy isn't even stronger is simply because of that. The demand's out there. They can't fill it. And so what they're looking for from government, I think good government policies in all these areas, like regulations, healthcare, obviously energy. They want vocational training. And when it comes to the tax cuts, I agree. We can do better. We should do more for individuals. We should have individual tax reform, make it simpler, fairer, flatter, where people can save, invest, hold, spend their own money the way they see fit, not the way the federal government, the bureaucrats, the politicians, and others tell them to. So going forward, I'd work in bipartisan fashion to make those things happen. But the need for skilled workers is important. And I guess I just open it up to any on the panel. Other than, first of all, does anyone here really want the tax cuts repealed? Is there anyone here that would say we should repeal them for small business? Okay. But am I wrong? I mean, is the demand out there that you could probably fill even more projects if you had 20, 25% more workers? I'll ask you, Mr. Conger.
Most definitely. And we experience that day in and day out. We're continuing to hire and invest a lot of time and resources into hiring not only skilled workers, unskilled workers, and management staff as we continue to keep up with the demand of the construction marketplace. And as a commercial construction company, we're not employed and there's not jobs if there's not businesses out there expanding, if there's not manufacturers growing, if there's not healthcare industries growing. So the growth of the economy and the growth in the various industries we serve is a direct impact to our business. And then again, the waterfall effect down to our subcontractors, suppliers, and frontline workers. So the economy is very well in a multitude of market sectors in Southwest Ohio, and we see that day in and day out.
And a lot of that has to do with the confidence that people have, either in their own livelihoods, the money that they make. They can go out and make purchases. Like I said, Alumacraft, where they make fine boats. People, that's an investment they want to make. It's something aside, not something they need to get through life every day, but want to go out and enjoy our beautiful lakes in Minnesota, many of them in Congressman Stauber's district and ours. And I think it just shows that the economy is strong. People are excited about the way things are going. I think we want to keep moving it in the right direction. And I've, again, pledged my bipartisan support to do whatever we can to improve this act and to do what we can for our businesses to make sure that they can grow and thrive into the future. Thanks very much. I yield back.
The gentleman yields back, and now we recognize the gentlelady from California, chairwoman of the Subcommittee on Investigations, Oversight, and Regulation, Ms. Chu.
Mr. Baig, as a member of the Ways and Means Committee, where the Tax Cuts and Jobs Act was being considered, I raised concerns early on about the pass-through provisions in the Republican bill, creating more unnecessary complexity for small businesses and allowing millionaires who can afford armies of accountants and lawyers to game the system. In fact, when we were considering the law, tax attorneys publicly stated that they were thrilled about the changes. One attorney at the time even told a news outlet, "This is an entirely new concept, and from a tax lawyer's perspective, it's like a new paint box. We have a new tool to play with." Well, we know that many small businesses don't have the ability to afford high-powered tax lawyers to play with the new tools that the Republican tax law provided. So, Mr. Baig, your small business was forced to to spend more on accounting services due to the complexities of the law. Major corporations can devote resources to identifying tax loopholes. Do small businesses have the same resources, and are you an isolated case, or have you heard from other small businesses that was forced to spend more on tax advice?
I have not just actually talking about myself, but all the small business that I've talked to in my community and across. Everybody is feeling that pain. I have, from my perspective, I used to have at the end of the year, I used to send my accountant a report, and that was the end of it, and they will process it. Now I have an internal operations person who's actually managing this on a day-to-day basis. And not only that, then I need to still do the accountant stuff on a monthly basis to make sure that I'm compliant. Because as the chairman earlier said, I don't want to see the audit knocking at my door. That's the last thing a small business wants, to basically something taking more out of you. Because as a small business owner, we wear too many hats. And adding one more hat can sometimes be the end of your small business. So basically, you're already stretched to the level beyond, you're to the breaking point. And adding more burden to the small business, you look at small business, majority of small business are passed through. They are not C corporations. So if you're looking at the majority of them, they're not benefiting from it. And the risk of the expiring, provisions in the tax cut is significant, because as of now, we're thinking, okay, yeah, there's a tax break, we're getting some money out of it, okay, let me take that money and invest it somewhere else. But at the same time, not if that project that we're trying to invest in, if it does not mature in next 2 to 3 years, all these 3 years of saving that I saved from my tax cut that I invested in with additional revenue into that particular opportunity is all gone. This is the risk that we are facing right now. There is the complexity, the understanding, and uncertainty, what's going to happen down the road. And we know it very well. Businesses with uncertainty don't do very well. The risk is significantly higher. If we have some kind of a certainty, permanency of these tax cuts that are in there, that will help a lot of small businesses to plan. And also then we know what to plan for from the accounting perspective as well. Right now, I don't know what I need to plan for next year, what are the provisions that are going to expire, what are I going to need to plan for year after.
Thank you. Thank you, Mr. Baig. Ms. Gravelle, as the bill was going through, I believe that the needs of women small business owners were not considered at all. We know that the vast majority of women-owned businesses, in fact, 88% of them, have revenues of $100,000 or less. However, more than 90% of the benefits of this tax bill, particularly the pass-through deduction that was intended to help small businesses, actually goes to those businesses with revenues of more than $100,000. Ms. Gravelle, in your research, did you find that most of the benefits of the pass-through deduction go to businesses making more than, in fact, far more than $100,000 in revenues, and why is this the case?
Well, most small business owners do have higher or fall in the higher income brackets, so they tended to get larger tax cuts. Despite the phase out of the pass-through, they tended to get the larger concentration. Studies by the Joint Tax Committee, studies by the Treasury Department have shown both the pass-through and the rate reductions were very highly concentrated at high income levels. The people who got the least from the tax cut were the lower 20%, lower 40%, lower half of the income distribution, and that's certainly true of the pass-through deduction, it's true of the rate cuts, and it's true of the entire tax, since most corporate rate cuts eventually benefit high income people.
And so for these women-owned businesses that have $100,000 or less in revenue?
They probably got very little. I don't know individually, but they probably got very little, if anything.
Okay, thank you.
Gentle lady yields back.
I yield back. Yeah.
We recognize the gentleman from Minnesota, ranking member of the Subcommittee on Contracting and Infrastructure, Mr. Stover.
Thank you, Madam Chair, and I appreciate you holding this hearing with the ranking member, and to the witnesses, thanks for your testimony. I just want to talk about some success stories in Minnesota's 8th Congressional District, which is it's a blue-collar district in northeast Minnesota. There was a brewery in Two Harbors which shared with me that they were able to save thousands of dollars because the federal tax on a barrel of beer was cut in half. Close to $60,000. And a knife sharpening company in Ely, Minnesota, told me they were able to invest in new sharpening equipment thanks in part to the Tax Cut and Jobs Act, which doubled Section 179 that allows businesses to expense equipment. A manufacturing facility in International Falls, Minnesota, Green Tech Manufacturing, a leading outdoor furnace manufacturer, has added 7 new positions at their small business thanks to the savings from the Tax Cuts and Jobs Act. There was a witness that I brought here to this committee earlier this year. He owns a rental company in Duluth, Minnesota, and he's also a constituent who testified in front of this committee just a few months ago. He told the committee that he saved $7,200 last year with a 20% pass-through deduction. These are small businesses that in our district benefited from the Tax Cut and Jobs Act. I think everybody understands that it was important. It was an important piece of legislation that helped many. Are there things that we now know can we do better at? Of course we can, and I look forward on this committee to work towards that a solution that continues to move our small businesses forward. Mr. Conger, I do have some questions. Would you support making the individual rates permanent?
Yes.
And do you think the economy is heading in the right direction?
Most definitely.
Mr. Wiley, would you support making the individual tax provisions permanent?
Yeah, yes.
I would just like to ask any of the witnesses, Mr. Conger, with you first, are there any improvements that Congress can make to build on the Tax Cut and Jobs Act?
Not knowing the Tax Cuts and Jobs Act inside and out, one of the provisions that we had utilized, we do both public and private construction, is there's a 179D tax credit deduction program for construction companies that create or work on construction projects that are publicly funded that make energy and efficiency upgrades. And it's
Okay.
my understanding that 179D deduction is still kind of in limbo, but there's some good savings of construction companies, suppliers, vendors that work in that realm that are making energy efficiency upgrades to tax our utilities less. There's a good savings there.
Okay, for my remaining minute and a half and the three other witnesses, Mr. Haig, what would something that you would like to see added to the Tax Cut and Jobs Act that can even make it better?
Just like the manufacturing sector and other sectors, like the distillery you mentioned, they are getting tax cuts, and hopefully they'll be permanent and they can continue to leverage those savings. Something for the professional industry, because our expenses are laptops and phones. So if there is
Perfect.
something for the professional industry.
Got it. Mr. Wiley?
I have a bunch of things. One is making the tax cuts permanent. The other is looking at the 199A deduction. The 20% deduction really isn't parity with the C corporations. It should be closer to 27, 28%. The research and development credit, one of the things that bothers me there is, we're playing around with that every year, and there seems to be no consideration that research takes time and planning, and you don't know whether it's going to be effective the way it was a year from now. This one is still in flux, so keep that consistent.
Thank you. Ms. Gravelle, you've got 20 seconds.
Well, I don't know that I can recommend anything, but there are a lot of options you could consider. But I think one thing we should be looking forward to is this proposal to amortize R&D down the road. I think that's something somebody needs to think about.
Great. Thank you very much. I want to thank each and every one of the witnesses for your testimony today, and we appreciate your time. Madam Chair, I yield back.
The gentleman yields back, and we recognize the gentleman from Pennsylvania, Mr. Evans, Vice Chair of the committee, for 5 minutes.
Thank you, Madam Chair. I want to thank you and your leadership as chairperson of this committee because I think it's been really fantastic at this time. I, like a couple other members on your committee, are members of the Ways and Means Committee. And I believe that the reason some of these complication issues have come up because anytime you do a tax package as was done in 51 days and no hearings, I mean, it's clearly mistakes are going to be made. So we need to state that 51 days, no hearings. And I've only been here for 2 years and 5 months. And I'm happy to be on this committee because it works together with Ways and Means. So I want to start with Ms. Gravelle. How does the absence of clear guidance make the tax compliance difficult for small firms?
Well, I think we've seen it with the pass-through deduction. They finally got the regulations out, but you had to deal with your taxes before those. For example, a simple issue like combining businesses under one ownership. That was an issue up in the air. When you became a service corporation, if your skill or reputation was supposed to determine that. So I think there was this lag in putting something into effect very quickly, and then a lag in regulations, and still uncertainties in the regulations. I think is problematic when you do something quickly. We also have a lot of technical corrections that need to be considered, like accidentally causing improvements to be amortized over 39 years instead of expensed and things like that.
So in other words, 51 days, no hearings, you're going to make mistakes like
I don't think it's just hearings. I think letting the professionals out in the community read what you're planning, do it, and hearing from them is a very important part of the process. But, you know,
But that doesn't happen if you don't go through a deliberate process.
no, you don't have time. A
Right.
few things they caught, but you don't have time for a lot of this.
Mr. Wiley, would you please share the survey results you find more compelling that the committee should take under consideration? Is a survey, my understanding, in your statement, you referred to a survey in which only 1 in 3 small business owners say the Tax Cut and Jobs Act brought a direct benefit for their business. Most small business owners are still unsure.
The NSBA did do a survey on that, and I listed that in my written testimony. I think one of the complexions is that I'm not sure they really know what the results of the tax cut are, so I think they're making some gut decisions. I think at the time the survey was given, I'm not sure they got the results from their accountants yet. But there's concern that they're not getting the benefit that they thought they were going to get.
Real quick, let me go to, well, can you walk the committee through the difficulty you face when filing taxes after the passage of your bill? And the follow-up would be is how would you simplify administration and compliance to help your business?
It was a bill that was put together very quickly. Getting the regulations under control was a problem. I would tell you that in some cases, especially in the international area, we got regulations and procedures April 13th from the IRS, and sometimes we've already paid the tax on that. So there was a lot of confusions on what actually was happening. There was confusions on the pass-through on the 199A. It was a difficult year to pull us all together because it was a substantial change.
Okay, real quick, I want to go to Mr. Bragg, is your name? Baig, sorry about that. What actions could this committee take to level the playing field for taxpayers who own small businesses?
I think looking at the small business, and I will go into the SBA stuff, looking at the small business NAICS codes, one of the things is also that we need to take a look at is what qualifies really a small business. An average small business, as per SBA, makes $50,000 a year. And if you look at the U.S. Census information from the Small Business Annual Survey of Entrepreneurs 2014, an average small business small earns less than $400,000 annually. So this is what the small business is really. They are not a multi-million-dollar businesses. And a lot of that goes back into the wages and stuff like that. Having pass-through ability, that's great. But when you start hiring people and paying employees, you get penalized. So how do you make some of these incentives permanent there where when you're hiring people, you're paying people, other things, you can get incentives for those as well rather than just pass through your personal tax cuts.
I yield back the balance of my time, and thank you, Madam Chair.
The gentleman yields back, and now we recognize the gentleman from Florida, Mr. Spano, for 5 minutes.
Thank you so much, Madam Chair, and thank you, witnesses, for being here and offering your testimony. I'm a new member of Congress, so I wasn't here when the Tax Cuts and Jobs Act was passed, but I do have a unique perspective on the topic. I've been a small business owner for about a decade and a half. The impacts that I've observed in my own small business and for other small businesses in the community that I represent, been board member on the chambers there, involved in 2 or 3 chambers over the course of the last couple of decades, and I've personally seen the benefit to our community. It's been instrumental in the economic success of our community. Main Street of our town is just booming, and whatever you want to attribute it to, I think at least in part the Tax Cuts and Jobs Act have had a positive impact. Our economy is thriving, and so when I was sitting here waiting, I have my accountant that has done our personal taxes for about a decade. And I said, hey, just give me your anecdotal impression, or is your assessment, is your understanding of what's happening consistent with what I'm feeling? And his response to me was, all capital letters with 4 exclamation points, benefit. I asked him, did the Tax Cuts and Jobs Act benefit, or has it been bad for small business? Benefit, 4 exclamation points. 2 senior helper franchises saved $3,200 and $4,400 in taxes. 1 local restaurant saved $2,800 in taxes on just the 20% pass-through deduction benefit only, does not even include savings from tax ratings going down. So his impression was the same as mine. The small business that I had was my own law practice, so we did a lot of estate work over the last several years. So one of the major benefits that I see in the tax bill is an increase in the estate tax exemption. And Mr. Wiley, you said, and I quote, the estate tax often is the estate tax often is very much a small business issue. We applaud the increase in the estate tax exemption, but we are concerned that the provision expires in 2025. My experience is that many small business owners, one of the issues that their families have when they pass away is they don't have the liquid assets to keep the business running because of the estate tax responsibility. And so, in my personal opinion, I'd like to hear yours as well, the increase in that estate tax exclusion, will it allow small businesses and their families, if they want to generationally continue practice in this area or work in this area of their business, will this increase in the estate tax exclusion help them do that?
I view it as the estate tax as a small business issue, really. I have less concern about the people that clip coupons, but the small business, it takes, if they get subject to an estate tax, it takes money out of their cash flow, their ability to reinvest. It is a small business issue, and I think the increase will help most small businesses avoid it.
Yeah. So in my experience, especially with family farms, right? The family farm situation, the major asset of your business is your land. And if you got to sell your land that you're farming on to pay an estate tax, you're no longer in business. So this is a very important issue to me. One of the things I think we have broad consensus on here today that we've kind of all agreed on, it seems to me, tax cuts should be made permanent, and it needs to be simpler. Let's get it done. Let's make it happen. There's no reason why we can't see those two things happen. I think we're all in agreement that those two things should happen and that they would benefit small businesses. With that, I yield back. Thank you.
The gentleman yields back, and now we recognize the gentlelady from Iowa, Chairwoman of Subcommittee on Rural Development, Agriculture, Trade, Entrepreneurship, Ms. Finkenauer.
Thank you, Madam Chair, and thank you so much for our witnesses here today and taking the time out of your schedules to be here. It means a lot. You know, when I came to Congress, I knew that the new tax law didn't deliver the way that it should have for hardworking Iowans. But I didn't realize the amount of unintended consequences it created until I started hearing from people in industries that have suffered and have actually taken the time to come here and talk about some of those issues. An error in the tax bill that makes it harder for Iowa's local restaurants and Main Street stores to invest in renovations and improvements to their storefronts, just to name one of them. The tax bill no longer allowed our workers to deduct the cost of basic things associated with their jobs, like uniforms or travel. And then some small businesses, specifically pass-through entities, may qualify for a new 20% deduction, but I've learned that the rules are so complicated for some that businesses aren't able to take advantage of it. On top of that, this deduction expires in 2025, giving business owners absolutely no certainty. Iowa's rural electrical cooperatives are among those hurt by the unintended consequences and have come to visit. They stay tax exempt, but they have to maintain an 85-15 revenue split, meaning 85% of their revenue has to come from customers. The new tax law has made that hard, though, by counting federal grants and awards, even federal aid from FEMA after a disaster, as non-customer income, and then throwing off that revenue split. I'm co-sponsor of several bills to fix these types of errors, but issues like these are exactly why we need a bipartisan approach when it comes to tax reform. This bill was put together essentially behind closed doors, and quite frankly, it shows. Mr. Bragg, what kind of impact do errors like this have on small businesses? And considering changes to tax law, what should Congress do differently in the future to make sure that both parties and stakeholders are heard?
I think we need to get the small business a little bit more involved into this because, making the decisions based on, this limited understanding of things sometimes, basically, and then a quick decision process, it hurts the small businesses. Having, the example I will use if somebody who's living at the penthouse, he sees sun at all the times, but somebody who's in the lobby does not see the sun. So the person in the penthouse will make the policies to limit the sun, whereas a person in the lobby doesn't see any at all. So they're contradicting each other. So if we can have some kind of an involvement on the small business side where small business can be participating in the whole process rather than making 51 days, if it takes 5 months, that's perfectly fine, but we have a better solution.
Thank you. And, I often tell my constituents that a day in my life in Congress actually looks quite a bit different than what you see on TV at night. And on this committee, we proudly work across the aisle to improve the lives of entrepreneurs and workers across the country. Just last week, the Small Business Committee passed 5 bills that helped veteran entrepreneurs start and grow their small businesses. These bills are an example of exactly what we should be doing here in Washington and how we should be legislating. And I can't say that about the Tax Cut and Jobs Act. The law was not negotiated in a bipartisan manner. It was put together far too quickly. It disproportionately benefits those in the top 1%, and it'll add, again, trillions to our national debt here. Ms. Gravelle, can you explain to us what the average tax cut would look like for the middle 20% of Americans versus the top 1% income group by the year 2025?
I'm not sure that I have those numbers right in front of me, but it's a very, a very small fraction of the taxes. For most people who weren't itemizing, they actually gained very little because even though there's a bigger standard deduction, it was offset by the loss of the personal exemption. So all of that pretty much washes out. So you're talking about a very, very small tax cut for those people.
Well, thank you. And thank you guys again for being here and having this discussion. We need to make sure that we're putting dollars into the backs or into the pockets of hardworking Iowans and folks across the country. But these types of things should be done with, again, our middle class in mind. And what we've seen here, I was disappointed with the last few years and hope that we can have better discussions moving forward. And again, thank you so much for your time and your expertise being here. And with that, I yield back, Madam Chair.
The gentle lady yields back. And now we recognize the gentleman from Pennsylvania, Dr. Joyce, ranking member of the Subcommittee on Rural Development, Agriculture, Entrepreneurship, and Trade.
Thank you, Madam Chair. Before I ask my questions, I would like to highlight what the impact of the Tax Cuts and Jobs Act had on my district in Pennsylvania. At the beginning of the year, we polled 4,500 of my constituents, and 80% of them reported that they support making the tax cuts permanent, exactly what you testified to us today. This statistic is particularly impactful when you understand that 99.6% of businesses in Pennsylvania are small businesses. While some of my constituents do work for larger corporations, the vast majority of them are self-employed or employed by small businesses. One constituent who has benefited from the tax cuts is Guy Berkebile, who's the owner of Guy Chemical Company in Somerset, Pennsylvania, in my district. Guy Chemical is an S corporation, which primarily manufactures adhesives. These products are made here in the United States, but shipped all over the world and shipped into my district as well. Before the Tax Cuts and Jobs Acts, nearly 50% of Mr. Berkebile's profits were lost to the government in form of taxes. Since the tax cuts, Guy Chemical has invested in new equipment, built a new lab that's 5 times larger than the previous one, purchased new mixing equipment, and new production equipment. Additionally, they added 29 new jobs, increased salaries, and gave bigger bonuses, all of which Mr. Berkebile points to as the results of these tax cuts. With that said, the bill wasn't perfect. I wholeheartedly agree that the tax cuts for small businesses and individuals need to be made permanent. Additionally, Congress has intended to provide retailers with the ability to fully and immediately expense interior remodels to their buildings. But an inadvertent drafting error termed the retail glitch has resulted in grocers and restaurant operators, amongst other small business owners, having to expense improvements over 39 years instead of the 15-year depreciation period they qualified before the implementation of the tax cuts. Despite the issues that I have highlighted to you, it is overwhelmingly apparent, based on conversations with my constituents, that the reinvestments that I've seen in my own community, these tax cuts were overall great for small business. There is a bipartisan consensus, which you've heard today, that many of the issues mentioned need to be addressed, and legislation has to be introduced to do so. My colleague, Mr. Brady, has introduced H.R. 22 to make the 2017 tax cuts permanent for middle class and small business owners like yourselves. Mr. Jason Smith has introduced the Main Street Tax Certainty Act to make the tax deduction for qualified business income permanent. Mr. Panetta has introduced H.R. 1869, the Restoring Investment and Improvement Act, to fix the retail glitch that I just talked about. Yet, we are almost 7 months into this Congress, and the majority has not allowed the House to consider any of these legislative fixes. I urge my colleagues across the aisle to work with us to fix these issues as soon as possible. Now I'd like to ask a few questions. Mr. Conger, would making the 2017 tax cuts permanent for the middle class and small business positively affect your business?
Yes.
Would it allow for you to make plans to expand your business well past 2025?
Most definitely. It would help us to plan out and further grow and well into the future.
Conversely, repealing the tax cuts, how would that affect your business?
It would have a negative impact of epic proportion, I believe, because it would affect so many other small businesses that would then stop to invest in their businesses, grow their facilities, buy additional equipment, and then in turn need additional space, which is what the construction services provide.
In your expert testimony, which was brilliantly given to us today, you outlined the importance of growth and development in your own company by these tax cuts. Will these tax cuts, if made permanent, allow that to continue for you?
Yes, I look forward to doing that. It's, as you grow a business and an entrepreneur, you're always planning and looking for and trying to look through a crystal ball out into the future. And through strategic planning, if we have certainty around the tax codes, we can better plan and better look forward into the future and make good business decisions.
Thank all of you for your testimony today, and I thank you, Madam Chair.
The gentleman yields back, and now we recognize the gentleman from Oklahoma, Mr. Hearn, ranking member on the Subcommittee on Economic Growth, Tax, and Capital Access, for 5 minutes.
Thank you, Madam Chairwoman. This is a topic I wish we had about 3 hours to talk on. I could take all 3 hours. I've been a small businessman for over 34 years across multiple sectors, banking, technology companies, real estate development, McDonald's restaurants. I also spent 5.5 years on McDonald's tax policy team, where we had AICPA folks on there under Senator Levin, and then Kemp, and then Brady, or Ryan, then Brady. So I've seen all this, and so the talk of bipartisanship, it's never been there. In fact, I want to ask a question in a minute, but as we get to talking about what's happened in our districts, it did make a difference. We heard about all the one-time benefits of giving bonuses, so people were able to do that. They attributed those directly to the tax code, and to say that it didn't attribute to the tax code would be to call those individual CEOs liars, and we're not going to do that. They know what they can afford and what they couldn't. It does have a different impact. Mr. Wiley, you're a witness for the Democrats. I'm going to ask you a question this time, but I really appreciate your testimony, because you've covered the entire gamut of why we needed it for C corporations and why we also need to make it more simple and permanent for small business. I think you've captured it very accurately. Madam Chairwoman, I have information from NFIB I'd love to support, ask unanimous consent to put into the record. They represent over 300,000 small businesses in America. I think they do a great job of referencing and showing the mood of the small businesses in America, and I'd love to put this into the record.
Without objection,
Thank you.
order.
I'd like to ask each one of you, and just a simple yes, because I've got like a ton of questions for you. Has there ever been a simple tax code, Mr. Gravelle?
Not in my recollection.
Okay. Mr. Wiley?
I haven't seen one, but every time they say it, my business goes up.
Mr. Baig?
Yet to see one.
Okay. Mr. Conger?
No.
So we're all arguing about whether this code is simple or not, but there's never been one. So we have nothing to reference for. It's just, it's different from the last one. The last time we had a comprehensive tax reform was in '86. We've had all kinds of iterations of messing with it along the way. But, you know, one of the things that we could ask ourselves, you know, regulation, we just had a field hearing in Tulsa this past week or Monday on regulation. Regulation is a longer word for tax. And you as small business people know this. You see what those impose on you. So, but one thing we do have we know facts. Small business people in general love facts. We have the lowest unemployment in many, many months. We have the highest employment possibly ever in the history of our country. We have growing wage rates. And so those are, you know, we can say those are happening by happenstance, but there's something that's attributing to those. So people are going to work. We have 7.6 million jobs unfilled and 6 million people looking for jobs. We need to do a lot of work in training these folks to get into those jobs. Mr. Wiley, I'll come back to you. You weren't originally on my question list, but I want to ask you this. Recognizing that we had to do something on a global scale because we're one of the highest industrialized nations from a tax rate standpoint, and you alluded to the fact that we went from one of the highest to now one of the lowest, and we've fundamentally changed how some of the northern European countries are doing business with their tax codes, and we've changed the flow of foreign direct investments coming into this country whether they were leaving or not coming here before. Is that correct?
Yes, I'd say, though, we're in the middle now. We're not the lowest, but we're in the middle, in the 20s.
You're right, because what happened after we changed ours, some of the northern European countries actually went and lowered theirs even lower so that they weren't not the lowest anymore.
Yep.
So we fundamentally affected the world. So that's how you can see as a response to what happened when we changed our tax code. I'll be the first to tell you that I agree that this code should be simpler. It is not simple. When you take away the personal side and also change the pass-through side, it gets very convoluted. In fact, I'm on the record saying when I was asked early on, how did this affect you? I said, I'll tell you after the tax, when my taxes are due, how it affected me, because it is different. I would say, as my friend from Florida said, is that we do need to make it more simple. And I also sit on budget, and we talk about this a lot. To make it permanent will cost, that last 4 years will cost the federal government revenues $957 billion. I will let you all figure out whether we can replace $957 billion in 2025 or not, but it will be a monumental lift. You are exactly right in your determination. I think each one of you would agree that the permanency of this is important for certainty, because while the C corporations, the large multinationals, were able to have certainty, as you as small businessmen and women and the people you represent want permanency. It'll be a huge lift. I want to tell you, each of you, I appreciate this. This panel is always so great because we remove the kind of the D's and R's from the conversation when the witnesses come, and it's great to hear the facts being given out by you all today. And so, thank you so much for traveling in and testifying to us. Thank you, Madam Chairwoman.
Gentleman yields back, and we will go to a second round. I have a question if you want to ask any other question. Mr. Golden, you're recognized for 5 minutes.
Thank you, Madam Chair. And I just want to quickly thank you for holding this hearing. I think it's important oversight work. You know, and I think the good news for all of you sitting out there is, you know, we haven't heard a whole lot of people talking about repealing these outright, but I do think that we have to go in there with a scalpel and try and fix any unintended consequences. That's our job. You know, Congress has done that already this year in a bipartisan fashion. There was a effort put forward by Congresswoman Elaine Loria and the Four Country Caucus, where you know, it was unintended, but it happened, where the survivors of service members killed in the line of duty suddenly had their widows' benefits taxed. And we've gone back and we've fixed that. That's good hard work, and it was the right thing to do. Talking again a little bit about some of the tradespeople in Maine, where maybe our construction economy is not booming so much. You can drive 6 hours in my district alone to cover it from north to south, and there's several hours more of it south of us. So you can imagine losing your ability as a worker to deduct transportation, meals, because you're having to drive as far away as a place like Massachusetts to work. That's a pretty big loss. You can see how your tax cut can suddenly evaporate all of a sudden when you lose some of those other deductions, like salt as well. I think these are things that we should have conversations about fixing. And when we do it, I think we're going to have to figure out how to pay for it. And one of the biggest, I think, problems we've all heard today is that while there may not be a mass effort to repeal the tax cut outright, it was self-sunsetting in that these personal exemptions and or personal tax cuts and other things are going away in 2025. There's got to be some discussion about how to pay for that. But I did just have a couple of quick questions for Ms. Gravelle. And you may not have it in front of you, so if you could just maybe follow up if you don't know off the top of your head. On the estate tax piece, I am curious, moving from 11 million to 22 million jointly in terms of that exemption, how many family-owned estates or small businesses, family-owned small businesses, like let's say a farm, are we talking about here? Do you have those numbers either? As
I used to do estimates of how many farms paid the estate tax under the old rules, and depending on which state, sometimes I came up with a half a farmer. Yeah. Sometimes it's a very small number. Only about 0.1% of decedents pay the estate tax, and only about 0.2% before. So nobody pays this tax to speak of.
Would the gentleman yield?
Yes.
So just 6,460 of the nation's 2.7 million estates owed any taxes in 2017. And just 20 of those taxable estates, less than 1%, were small businesses.
That's right. It's just, I have a paper on this, so I've looked at this a lot, but there's just very little. This is something people talk about more than actually happens. It very rarely happens. Plus, there are a lot of ways that you can delay the taxes and that you have ways to try to deal with any liquidity, but it really happens because the taxes are rarely due.
I also wanted to ask, there's a lot of conversation about closing the carried interest loophole. Did that get closed in full?
No, there's conversation about it, but it never seems to happen, and that's one option that could be considered because it's a very high-income people who are essentially, most people believe, are really earning wages.
Well, thank you very much. Madam Chair, I want to thank you again. And I do think we got some good opportunities as a committee to work together in a bipartisan way to fix some things. And at the end of the day, I think the conversation is how do we make sure that we do this in a way that is to the great benefit of small businesses and working people first of all. So thank you very much.
Gentleman yields back. Mr. Evans, you recognize for 5 minutes.
Thank you, Madam Chair. Madam Chair, I'm sorry that my colleague who quoted that it would cost $900 billion has left because budgets are about choices. And obviously there was a choice made, and I don't get upset with it. It would not have been the choice that I've made, but a choice was made. My Republican colleagues made corporate tax cuts their choice and pass the cost on to small businesses because the small businesses' tax cuts will expire. So we need to set the record straight about what is happening here. And we need to be very clear so people know what's happening here. So when we talk about that $900 billion, which ultimately the debate about how it's going to be permanent, is because a decision was made. Now, I would not have agreed with that decision, but that decision was made. So, Ms. Gravelle, I'm coming to you, is how does the temporary nature of these tax provisions, the disadvantaged small businesses, have the impact when a decision was made to make the corporate tax cut permanent and make the tax cuts benefit small business expire? That's a choice. So can you speak to how does the temporary nature of these tax provisions put a disadvantage to small business owners?
Well, there was a $1.5 trillion constraint in the budget agreement. So by allocating a great deal to a permanent corporate tax rate, you used up too much revenue to be able to make these tax cuts permanent. Everything is about trade-offs, and I think one of the things that has been kind of missed here is this debt issue is a serious issue. I mean, it is going to crowd out capital. It's going to reduce the funds available for private borrowing, and there's a great deal of concern about already with interest, $2 trillion, and then are you going to add another trillion? So it is about what your choices are.
Would the gentleman yield?
Yes, I
On
yield.
that point, Ms. Gravelle, so is it fair to say that one of the reasons we find ourselves closer to reaching the debt ceiling is because of lower corporate tax revenues as a result of the tax law?
Yes, the revenues were well more than, I think it was about 2/3 or perhaps more of this total $1.5 trillion. It was a big piece. And a lot of that revenue went to companies, not like Mr. Conger's company. We could have done something with his companies with graduated rates or whatever. It went to Apple and Facebook and these large multinational corporations who then spent a lot of that money apparently in share buybacks. They did not apparently make investments.
Which in return, in a state like the state I'm from, Pennsylvania, which we have that 99% of businesses are small business, 99% are the backbone, fifth largest state in the nation, as a result of a decision that was made, and it was a primarily person-made decision, we're now sitting in a situation that our small businesses are in jeopardy in terms of their own situation of expanding on their businesses and hiring people. Would you speak to that?
Well, I think if you give people a tax cut and then you say it expires, but you meantime carry on with a large, it's harder to see what's not obvious to us. So we see what we do on our tax return. What we don't see is what happens down the road when you have crowding out investment, pushes up interest rates. So in that sense, the small businesses were the losers because they only got a temporary tax cut, but they're going to have to bear the burden of the borrowing cost of this additional debt. The corporations, I think.
And that's why I think the chairperson of this committee, to me, very appropriate having this discussion is very helpful to the public, because those very small businesses that I was talking about, and she's been to my district, which has a great deal of impact. We have 26% poverty, and those businesses, cannot have access to capital when you talk about crowding out. So I want to thank the chairwoman for this has been a really insightful discussion and the challenges that we have for the future. I yield back the balance of my
The
time.
gentleman yields back, and now we recognize the gentleman from Ohio, Mr. Balderson, for 5 minutes.
Thank you, Madam Chair. Thank you all for the committee for being here today. So I've been in a couple other committees at the same time today. This committee plays a critical role in the success of our nation's small businesses as well as our nation's economy. According to the Small Business Administration's 2018 Economic Profile Report, 99.9% of businesses in the United States are considered to be small businesses. For my home state of Ohio, there are nearly 950,000 small businesses employing more than 2 million people. Last year, Ohio small businesses purchased $10 billion in revenue, which funnels straight into our economy. Needless to say, small businesses are vital to our country's prosperity. Since joining Congress, I've made it a point to engage with and support the small business community in Central Ohio. I have organized a small business advisory committee for the 12th District so I may better serve these hardworking pillars of our community. In my conversations with my constituents and small business owners in Ohio, however, I have heard seemingly endless stories about the benefits of a single piece of legislation, the Tax Cuts and Jobs Act. Just this past week, I had the pleasure of meeting with a group of small business owners from across Ohio, including several from my district in Central Ohio. The individuals in this group work in an array of industries from auto parts dealers to manufacturers. And in this meeting, each and every one of these small business owners reiterated how beneficial the Tax Cuts and Jobs Act has been to their small businesses and its employees. One example that I'd like to highlight is a constituent of mine and a member of my Small Business Advisory Committee, Kelly. She is a vice president of GKM Auto Parts in my hometown of Zanesville, Ohio. In 2016, Kelly had to pull the plug on providing health care benefits to her employees because the Affordable Care Act was not indeed affordable for many small businesses. In her words, the ACA drove our premiums through the roof, making it impossible for her to offer employees a decent health plan. In anticipation of the job cuts and acts Job Acts passing Congress and being signed into law by President Trump in 2017, Kelly and her business opted to once again offer medical insurance to employees with a 60-40 split in premiums. For her, this was solely possible due to the financial savings the Tax Cuts and Jobs Act produced for her business. In addition to health benefits, GKM Auto Parts was able to give raises to staff who had not seen a salary increase in 3 years. Kelly was adamant in telling me that absolutely none of the tax benefits her small business received as a result of the Tax Cuts and Jobs Act went into her pocket as the owner. Instead, this money was given directly to her employees through pay bumps and health benefits. I've also spoken with small business owners about how the Tax Cuts and Jobs Act has resulted in their ability to expand staff. This job creation profoundly affects not only the small business itself, but due to the community as a whole. In my home of Muscatine County, the unemployment rate has been cut in half since the enactment of Tax Cuts and Jobs Acts, now sitting at 3.7%. Finally, and perhaps hitting closest to home, the family of a member of my own staff has been positively impacted by the passage of Tax Cuts and Jobs Act. Her parents' business, Mansfield Distribution Company, has been able to increase the pay for their employees by $30 per week. Now, that might not seem like a lot to some folks, but when you multiply that amount by 52 weeks, that's an increase of $1,500 each year. These employees have used this money to make home improvements, buy new cars, and support other local businesses. As a member of this committee, I will continue to work in the support of small businesses of Ohio and around the country. We still have much work to do, but I'm committed to serving my constituents in the Ohio 12th District who either operate or are employed by small businesses. My question is for Mr. Conger. In your opening remarks, you discussed how your family's small business has seen a growth of 110% due to the Tax Cuts and Jobs Act. This is a phenomenal example of this legislation's success, and I thank you for sharing your story with this committee. I believe you are uniquely positioned to speak about the impacts the Tax Cuts and Jobs Act has had on Main Street, as you are the current chairman of the board for the Associated Builders and Contractors, ABC of Ohio, the chairman of the board for the Workforce Investment Board of Butler, Claremont, and Warren counties, and a board member of the Jobs Ohio Regional Economic Development Initiative of Cincinnati. Not to mention, you are also president of your family's small business, Conger Construction Group. In your testimony, you discussed how your business, along with others in Ohio, have been able to reinvest in your small business and the community at large thanks to the increased revenue you've experienced, the Tax Cuts and Jobs Act. Would you please elaborate more about how your business growth and expansion has benefited the town of Lebanon, Ohio, and Warren County as a whole?
Time has expired. I'll give you 10 to 15 seconds.
Thank you,
Sorry.
Chairwoman. The tax cut has greatly impacted the city of Lebanon and Warren County, Ohio. We see a multitude of businesses, manufacturers in Ohio being a day's drive from 60% of the population in America. So the manufacturing that is going on in Ohio and the growth of jobs and economic boom to businesses growing and expanding, not only affecting my business, but a multitude of others in and around Southwest Ohio. Thank you, Chairwoman.
The gentleman's time has expired. And let me take this opportunity to thank all the witnesses for taking time to be here and for your insightful discussion that we had here today. And yes, we all agreed that we should, that small businesses should come first when it comes to tax policies, as we have seen, always are an afterthought. And as I said at the onset, it has become increasingly clear that the lion's share of benefits from the Republican tax bill will flow disproportionately to the largest corporations and the very wealthy. Now, people understand that the tax cut that we pass basically will not help small businesses because it's going to expire in 2025. And everyone has introduced legislation to make them permanent. The issue is how we're going to pay for it. What was touted as a clearer, more simplified tax system has simply left too many small businesses behind. Simply put, small businesses and working families were not a priority when this bill passed. We need to do better for Main Street. With that, I will ask unanimous consent that members have 5 legislative days to submit statement and supporting materials for the record. Without objection, so ordered, and if there's no further business to come before the committee, we are adjourned. Thank you very much.